Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. This is where we look beyond just the headlines to get you the insights and knowledge that will help power smarter decisions. I'm Forkast's Megha Chaddah. Well, we've sure come a long way from the heady days of November 2021, a time when crypto market was worth almost $3 trillion, when Web3 projects were launching at breakneck speed, and terms like Bitcoin and Ethereum and hot wallets and NFTs, all of those became mainstream. But then came the crypto winter as some of the biggest crypto projects collapsed. Governments, regulators, and even the common man began questioning the people and utility behind Web3. But as the hype and the fluff dies away, those who are building the foundation of a digital future continue to march on. And today in this special edition of Forkast IQ, we speak to one of the leaders of the Web3 industry. Yat Siu, co-founder and chairman of Animoca Brands, joins us today. Yat, it's so great to have you with us.
Thank you. It's a pleasure to be here.
Well, let's start off with my first question, which is that you and your firm, Animoca Brands, are both based out of Hong Kong. And the city has made some rather big moves on the crypto regulatory front this year. But the city has also seen one of the biggest financial frauds, if not the biggest, which was executed by a crypto platform. I'm talking about the $1.5 billion JPEG scam. Now, some have said that the regulators in Hong Kong did too little, too late. How do you see regulations and regulators developing ahead in Hong Kong? What are we probably going to be seeing in terms of keeping these bad actors in check?
It's only been about a year since Hong Kong has announced that they're actually going to be progressive and move forward, which they definitely have. I think it shows, if anything, the need for more regulation. The JPEG situation, as unfortunate as it is, has not actually derailed the course in Hong Kong at all. I mean, Chris Hui has been pretty adamant and clear in his opening talk that, Web3 is here to stay and they're taking it seriously. And the financial secretary himself has also basically continued to voice his support. So, we're very, very sort of positive about sort of where it's going. And I think today there's alternatives. I mean, if you really want to trade crypto, there are actually licensed exchanges that are out there, being Hashkey and OCL, that you can do so. So why do you want to sort of, use an unlicensed one, for instance? I mean, all these things ultimately are things that one has to educate, but there's clarity around that.
I want to talk about Animoca then. Your firm is all about the creator economy. That's the basic premise of the company. And Goldman Sachs says that creator economy, as big as it is right now, it's only going to get bigger. And they are saying that it could be worth as much as $500 billion in another 2 to 3 years from here. What sort of role do you see for Animoca in this journey? You're also backing companies who are furthering the creator economy. And Sandbox is one of your investments, which also recently announced a $100 million game maker fund. So tell us more about Animoca and the path ahead for the next few years.
Right. So first, the vision of Animoca really is around sort of digital property rights. And digital property rights, the foundation of that is things that you create and things that you own and have done. And the foundation, therefore, is that without actually owning your stuff, then how can a creator build something if they don't have ownership over it? Like, these are very tied. After all, if it's your photo, if it's your image, or if it's your music, you should be entitled to all the benefits that come from that. But in the Web2 world, in some way that's been taken away from us. If you share photos on Instagram, if you sort of monetize your music on Spotify, actually they take most of the value, or in some cases they take all of the value and you get very little, and you're just enhancing their network. So this is why Web3 is so fascinating. And the Sandbox Creator Fund, really, the Game Maker Fund, is really to sort of build out sort of that gaming ecosystem and empower creators to basically continue to build on Sandbox and build these experiences in which fair value can be shared. An example, the NFT industry last year generated over $24 billion in sales, which in itself is actually a pretty impressive number. But what's more impressive is that 90% of that value went to creators and owners of these NFTs. Now, why do we focus on the creator economy? Because inherently, we think that humans are generally better built to be creators than to be machines. What that tells us is that actually innately, we're born to be creative. But what happens is that in the systems that we live in, the schools that we go to, whatever structures we have, actually sort of make us lose creativity. And that actually is it's one of the bodies of work that the late Sir Ken Robinson spoke about and wrote about. And I think this sort of says something about us as humans. We're actually naturally creative. Why do things like Instagram or social media take off the way that they do? Because actually what are we doing is we're pouring our own creativity into these networks, whether it's through photos, through storytelling, for sharing information, but in reality, we're actually enriching their network, even though it's our creativity. And so in Web3, and with things like Sandbox, we hope to take that back and give control to the actual creators, the actual people who have made value to these networks that it helped construct.
So empowering the people behind the creation that we see. Now, the Web2 creator economy so far has been dependent on apps and platforms like TikTok, Instagram, YouTube, Facebook, etc. But there's quite a few roadblocks when it comes to Web3 in terms of people's understanding of it, in terms of accessibility, figuring out how these platforms work. And honestly, Web3 is also in a pretty nascent stage at this point in time. Do you think that all these roadblocks or pitfalls are going to be a significant deterrent?
When we think of the Web2 platforms, we used to think of them as tools. We used to think of them as tools to enhance our creativity, to make things easier. But in reality, they actually ended up using these tools to enhance their own networks. So I think that's been one of the roadblocks as a result, is that we've forgotten what it is to have self-sovereign identity online. We don't actually value the creation that we do online because it's free to post apparently, and it's free to receive. So somehow, we don't get it. But actually in the back, there's a value exchange. And that's actually what blockchain does. What blockchain does, it opens up the financial layer of what happens in the back. This is true not just for basically digital assets or items, it's true for gaming, for instance. So now I'm able to see what someone else paid for it, or how much revenue was generated from that. And as a result of that, I want my fair share. So what it is needed is for people to actually understand what their creativity is worth. And in the world of Web3, that means enhancing financial literacy, enhancing the knowledge of what ownership is all about. When you own an NFT, for instance, in something like Sandbox, it is still way, way more valuable than the vast majority of gaming items. And why is that? Because you have a network of other people that value it, and you also have ways in which you can validate that network effect and value through on-chain activity. It may seem like it's taking a long time, but we've come a long way. I mean, the entire Web3 space now is about a $1.2 to $1.3 trillion market. DeFi does over $100 billion of volume a day. These are essentially sort of economic sort of sizes of the size of reasonably sized countries, and it continues to grow.
Well, that brings me to the next question about network effect. A lot of value of what lies within what's been created in the creator economy is because of the network effect. We're increasingly seeing the social Web3 apps also being developed. We've seen apps like Friend take off. Are social Web3 or blockchain-based applications something of interest to Animoca, especially given that it's seen some taint as well in these initial stages? You hear of rug pulls, token manipulation, etc. So there's a lot of concerns out there, but there's some good to be had as well.
Fundamentally, we think tokenization of our digital experiences is critical. Not because we think of it in terms of the pure financialization. That's one aspect of it. What's more important is the ownership paradigm. So, one of the best ways in which you can demonstrate ownership at scale on blockchain is through tokenizing. I actually had the ability to monetize it if I wanted to. I didn't necessarily have to. There's many other network effects that can be built upon that. The other thing is that when the asset does exist in a freely composable manner, which is what true ownership is about, then people can construct network effects, which on blockchain you can measure. And on blockchain, you can measure that instantly because you can see what someone else has paid for it or how they're using it. And so these network effects that were considered previously hard to measure and a little bit more of a gut feel or pushed up by marketing is now something that actually on-chain you can see exactly what's happening. And I actually think that gives not necessarily just more liquidity, it also allows people to better risk assess what's going on long term. So tokenization of your virtual experiences, it's not quite there, it's a bit clunky, it's a little ugly, but it kind of showed the way. And frankly, if it wasn't for MySpace, then we wouldn't have Friendster. And if it wasn't for Friendster, we wouldn't really have Facebook, right? So it's all part of that evolution. We're still experimenting, and we're not claiming to have all the answers, but we definitely believe that we have to experiment with this new paradigm of ownership that then invariably does allow for this finance effect to take place. But again, we don't think is the only critical piece around it. It is just a very dominant piece today.
Well, hold on to that thought. Yet we'll be taking a short break now and deep dive into tokenization on the other side. Don't go anywhere.
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast News.
Welcome back to Forkast IQ. Now, this is a special edition of the show with Web3 veteran investor powerhouse Yatsu. He's the co-founder and chairman of Animoca Brands. Yet, from the virtual world, let's go across to the real world and talk about the hottest trend in Web3, and that is tokenization. We are seeing a lot of TradFi interest come into the space. From treasury bonds to real estate to art, everyone seems to be going around tokenizing real world assets. But what do real asset world tokenization mean for the common man? What's your reading?
I think it is another interesting way of onboarding, because most people are more familiar with something that they feel they can sort of touch and see. So if you end up sort of tokenizing basically physical assets, that actually makes them understand the concept a little better for a certain group of people. So we're certainly not opposed to it, and we think it's going to be a potential growth vector. But I also understand why more people in the traditional world, particularly in the finance sector, would be excited about it, because that's the world they understand anyway. I mean, they've create financial instruments for physical items every day, whether it's sort of, horses, or whether it's real estate, or whether it's paintings as well, and then there's a whole finance infrastructure, which you can lend and collateralize, that they're familiar with. So they'd be excited about that. To us, again, it's an important piece, but we don't think it's going to be the most important piece in terms of mass adoption. And the reason why is because most of the world still does not have enough real world assets that they could tokenize. Meaning that it is the kind of product that would probably most benefit the 1 percentile or the 0.1%, which has been a feature and a problem of the current industry. Whereas the digital world is the one that's kind of the new frontier. It's something that people are claiming ownership on, but it has really generated opportunities for, think about what happened with NFTs and with crypto broadly. It's been really the platform that's generated opportunities for people who did not come from traditional wealth.
I want to talk about artificial intelligence, or AI, as well. It's something that everyone's talking about, with ChatGPT, and companies are also trying to get ahead of the curve with understanding how AI could develop down the road. Now, the confluence of AI and crypto, and let's talk about that. You have said that 70 to 80% of crypto transactions will likely happen through autonomous AI agents. How do you see that happening?
So the way we can think of AI is essentially as something that will become another form of an extension to our existence that will facilitate our life. And we think that will come from these AI agents. When you think of your smartphone, for instance, which is not an AI per se, but does a lot of things that are actually artificially intelligent in a machine learning kind of way, it's actually an extension of, I would say your body, except it's physically, maybe not physically there, but if you don't have your phone, the reaction that people have is like flustered. And we think that AI is going to be that natural extension from that. And we think gaming is going to be one of the big drivers. Because the largest way that we socially interact actually inside games with an AI is actually NPCs, non-player characters. But with LLMs, actually, you're not going to be able to sort of enrich that experience, which is of course great for engagement, great for gameplay, but also they become autonomous. So what we expect is that these AI autonomous agents inside these games can start floating around, right? Because again, if it's on-chain, then they can have identities and they can go around and basically become independent almost in some ways, or work for you. We also foresee in the future that we will not have one AI agent working for us. We will think, much like a mini employment in our own home, we're going to have 10 or 20 or 30 AIs that specialize in different things, and they will simply work for us like our own personal advisors. When you think of how to prevent scams, when you think about, do I trust this website? We started from the premise that the human is the ultimate sort of controller. Right? We thought of it as, okay, do you want to block this website? The antivirus tool is built in a certain way for that experience. But actually, when things happen so quickly, the AI agent is the only way in which you can keep up at the pace of maybe bad things happening online, fake news, all that kind of stuff. Well, these AI agents are going to transact with other AI agents, of course, right? Because we're all going to have AI agents. And they're not going to transact, necessarily just because we tell them to. We're going to give them instructions that are based on our belief systems or on our values, and they're going to act upon them. But they're going to transact it with other AIs that are similarly set up, or set up at least in a certain manner. And they can do so at lightning speed because it's all done on AI. And what are they going to transact in? Of course, they're going to transact in crypto. They're not going to transact with fiat and cash and sort of wire money over. It's all going to be done entirely sort of natively in crypto. And we think that's going to be a big driver for transactions, for volume and utility. And as a result, we think that AI is actually going to supercharge Web3, because the other thing is this: many people will want to have the AI be their AI. They want it to be sovereign to their own ideas. And if you actually have the AI sit on another platform, that can always be manipulated. In the beginning, as is usually the case, people go, maybe that's okay. I don't mind, if I just depend on OpenAI. But what happens when someone tweaks the algorithm in the back of OpenAI for some political or other reason, right? What happens then when the information that you're getting is maybe one that's not the information that you thought is right, because maybe it was manipulated, which, by the way, happens, right? It's a form of censorship. Actually, you need to have self-sovereign ownership of your AI. And that's actually what blockchain is able to do.
Yeah, given how passionate you are about AI, I'm sure you've been looking at firms that are active in this area, developing technologies, algorithms, etc. What's really standing out to you right now? What's caught your eye, either from a personal investment capacity or through Animoca?
We're very, very fascinated about sort of AI in the area of, again, sort of autonomous agents. Gaming is a big area for us because we also think the engagement is going to be a big area. So broadly speaking, we think that's going to help also educate people about the space. We started doing AI investments back in 2018. When we sort of, and we have a number of very interesting companies in the field, whether it's, for instance, personal finance or robotics, just because of the fact that we always felt that AI was going to have a big impact. One of the things that's also needed for a good AI is knowing the source of your data. And blockchain actually is a mechanism in which data itself can be sort of at least verified, or at least the source can be verified. So, and again, I guess it's a perfect demonstration of, we may not have exactly foreseen where AI would go with Web3, but we knew there was some integration around that. And several years down the road, it may have taken slightly different shape, but the actors in the space, which is blockchain/Web3 and AI, they're still the same.
Well, before we wrap up this conversation, tell us also about your strategic partnership with NEOM Investment Fund of Saudi Arabia, which will entail a $50 million investment. How would you be deploying these funds? What does this partnership extend to? And what is it that you're looking to do in Saudi Arabia?
When a place like Saudi says, actually, we think this is the future, this is great, then they've become committed and putting that forward. And I think this is not just a signal for us as a business, but I think it's a signal to every Web3 company in the world to start looking at the kingdom through a different lens. Now, what does it really mean? Well, first of all, MENA is one of the fastest growing markets in the world. The population in Saudi itself, I think more than 80% of the population is under the age of 36. Right? So you've got a very young population that also is very digitally native. It's one of the largest per capita gaming audiences in the world. And also it has very high ARPU in gaming. For a place like Saudi, it would also be, ultimately mid to long term, basically ledger transaction services or certificate of ownerships. If you look at the kingdom's sort of goal for Vision 2030, they want, I think it's somewhere between 4 to 5% of their GDP to be basically coming from digital activity like gaming. I mean, that's a massive number given where Saudi is today, which means they need, to have, 30, 40, 50,000 people employed in the digital sector. And basically the growth sector for this in our mind is going to be in Web3 and blockchain. And NEOM is also trying to build a city of the future with things like the line and sort of the vision that they have about this. And what's nice also is that, the city of the future, as it were, the society of the future that NEOM is building, has now also said that Web3 and blockchain is a critical part of it, which basically is a clear indication that they also believe that Web3 and blockchain is the future.
What about the broader Middle East region? VARA, which is Dubai's digital asset regulator, set up a digital headquarter in Sandbox last year. Do you expect this trend of moving to the region growing stronger? What are Animoca's plans for the UAE?
We love the UAE. I mean, it's interesting because there it's not just specifically Dubai, there's Abu Dhabi, there's Iraq, there's all these other places that are evolving as well. And we have lots of customers there today just because of the fact that as a market, even though it's not a big market, It's a very sort of digitally native, in terms of digitally asset native market. It's also been a very international place, and because of its taxes and its more friendly regulatory framework, it's attracted a lot of international people to come to Dubai and build their sort of crypto-related business, which then consequently also is interested in both investments as well as a sort of utility in sort of the Web3 world. So yes, UAE has always been a great market, and it's just not as big as Saudi in terms of number of people, but it's definitely an important market.
Well, 2024 is around the corner yet. This has been a tough year for the industry. There's been a lot of learning, a lot of trial by fire. What's your outlook for 2024? What would you be wishing for?
If you take a look at last year, in exactly 1 year ago, Bitcoin was about $20,000. And today, Bitcoin is roughly between $34,000 to $35,000. To me, that's kind of representative of the state of optimism that we have in the market. I'm not saying that, whether the value is in and of itself fair, because there's a lot of sentiment that goes into it. But the inflation rates, the regulatory unclarity in places like the US, or albeit countered by the regulatory more higher clarity in places like Dubai, Hong Kong, or Japan, for instance, have now created this new equilibrium in the market where people are now comfortable with where it's going. And with Bitcoin spot ETFs, which everyone's excited about, obviously in some ways you could say that the price markets developed because of anticipation of it. But actually, when it actually launches, we believe it's going to have an even bigger impact because of the fact that it will sort of create new interest in the space in a manner that is sort of safe for family offices and other ones to participate, and eventually sort of lead to broader adoption and participation. So I think 24 is going to be a great year. I'm not sure I'm ready to say bull run per se, but definitely it's going to be a much more stable and sort of positive environment. And I think it's coupled with the fact that, the SPF chapter is now, moving towards a very definitive close, which means we are now moving on from sort of the bad times and also from the bad actors.
Yeah, it's been a pleasure talking to you today. Thank you so much for joining in. Well, with that, it's a wrap on this week's show. Thank you so much for tuning in. Forkast IQ, get intelligent in Web3.